Vamos a continuar hablando con nuestro siguiente invitado de la noche, con Alexandre Lazarow, Managing Partner of Fluent Ventures. Good evening, Alexander.
Hello, pleasure to be with you.
It's a pleasure to have you here at Negocios Televisión with us. I would like to ask you, Alexander, recent advances in AI tools have triggered a sharp sell-off across software and data stocks. From an investment perspective, Alexander, is the market reacting to a short-term fear or to a genuine structural shift in the software business model?
It's been quite a week with a sea of red. Look, I think it's both in this sense. AI is a massive platform shift that offers us the opportunity to reinvent how many core software and technology services, and frankly, a lot of human services are redone. And so, yes, it is a massive long-term shift. And also, I think it is a big short-term reaction too. My sense is that the baby is being thrown out with the bathwater. I think there's a lot of great companies that are serving very important needs who are well positioned to integrate AI into their products and services because they either own the customer or in the payment flow or what have you, and others that might struggle a little bit more. And so I think the answer is very much it depends in both to your question.
Enterprise software has traditionally relied on high switching costs and recurring revenues. Do these new AI capabilities threaten that competitive moat more than previous technological cycles did?
You know, I think that's a really good question, and I think it depends on what is the moat. Sometimes the moat was, we have this like network of data, and we take data from here and there, and you're like in the workflow tools. I think that is much easier for an AI system to automate, to understand what is the workflow and change it. That's fundamentally different, I think, than other types of network effects where you're bringing a bunch of people together in one place to transact more efficiently, like you have with marketplaces, or there's a unique set of data that is built into whatever ecosystem that you own. That's actually much harder for a generally trained foundational model to be able to replicate. And so I think that where moats will be eroded, I think will really depend. One of the classic, I'll just give you an example. Like every week, I think there's new advances in AI. And so every week, I think in some ways my opinion shifts. But people talked a lot about how CRMs might get totally shifted in the way by LLMs in the way you might have relational intelligence. And I've believed that for a long time. And also, arguably, some of the best positioned companies to take advantage of that are those that have the relationship data already, that are the CRMs. And so, who's going to win the war? I think it also depends. This will be figured out in the battlefield in the coming months and years.
Alexander, around $300 billion in market value has been erased in a matter of days, as we have seen. How do you separate real disruption risk from indiscriminate selling across the software sector?
I am a venture capitalist and not a stock trader, and the result is, when I invest in a company, my capital is locked for 5 to 7, sometimes 10 years, and so I think much more in that type of time frame than I do, 2 to 3 days. The old adage of it's easy to overestimate what you'll do in a year and underestimate what you'll do in a decade. I think this is very much what's happening. Like these changes are important, but for a lot of companies, it's not tomorrow. It's taking some time, and I think that for those that are positioning very intelligently today to reinvent, like fundamentally rethink how they deliver their product and how they build their organization, I think they're going to be very well positioned to continue executing. And I think those that don't, buyer beware on those. And I think that is the challenge. I think there's some really interesting opportunities both in the venture and the public market sides, but there's also a lot of noise.
Alexander, private equity and private credit have built large exposures to software based on assumptions of stability and stickiness. Does this episode challenge those assumptions in a meaningful way?
100% they do. This is the same type of shift that happened a couple times before, right? Like we went from analog era to the web. That fundamentally changed assumptions. We went from the web to mobile, and all of a sudden we had a new delivery mechanism and way to reach customers, and went from mobile to cloud. I think of AI as another one of these waves that are dislocations where the steady state is no longer current. And I think three things are happening at once. One, every single public company wants to and needs to have an answer on what they are doing with AI, how they're adapting their business model, how they're increasing the efficiency. And so I think they're looking for solutions and an answer. I think too, all of a sudden, it is cheaper than ever for an individual at a business or an entrepreneur to experiment with ideas, build their own SaaS, and that's only getting easier. If you look at some of the things that Claude Code released recently, for instance, that powers some of this in Claude Cowork. So I think we're going to see a lot more of kind of much more bespoke, especially workflow tools. Certainly, you know, I run a small VC fund focused on global innovation trends, and we are seeing that, and we are experimenting with that, candidly. And then I think three, I think there's a genuine new value prop that is being created that wasn't possible before in a pre-AI era. So yes, like I think the old assumptions on that are getting rethought. And I should make one last comment. I actually think there's just a lot of experimentation. So yes, everyone's trying AI and some of the new tools, and people are still figuring out what is the right thing for their business and whether or not and where it adds value.
Alexander, as AI investment costs rise and cloud growth slows, are markets starting to shift the AI narrative from growth potential toward pressure on margins and return on capital?
You know, it's interesting. I wrote a book a couple of years ago called Out Innovate, how global entrepreneurs from Delhi to Detroit are rewriting the rules of Silicon Valley. It came out with Harvard Business. It's in Spanish and a number of other languages. And in the book, I talked about how the best entrepreneurs outside Silicon Valley didn't just focus on growth. They focused on a portfolio of growth, but efficient growth, strong unit economics, profitability. I think that's really what is going to matter in this era, is being able to prove that you've got a great long-term enduring business model that can scale, that ultimately is providing real value to the customer. And I think those businesses that aren't just providing we're talking about enterprise and things like that a second ago, they aren't just providing an enterprise service or a SaaS workflow tool, but that are closing the loop on the service they're doing. You know, you're offering a medical product and you're having help with AI on the back end for your medical clinic, or you're offering a financial service and there's the AI is part of that story, but you're closing the loop by actually delivering value. I think those types of businesses are still going to have a really good positioning. And I think if they mix that with like strong unit economics and a great cash flow position, I think that's what people are going to be looking for, and certainly what I'm seeing at the early stage.
Alexander, it's been a pleasure to have you with us and to go deeper in this topic, which is very interesting. And our audience, I'm sure, are pleased to hear your tips and everything. So thank you, Alexandre Lazarow, Managing Partner of Fluent Ventures. Thank you. Have a good rest of your day and good weekend.
Pleasure joining from Silicon Valley. Thank you for the time.
Bueno, pues